Hey folks, welcome to another edition of Market Correction Analysis by InTheMoneyStocks.com for August 6, 2007. Well, we had quite a rally today, folks, and I'm going to go into that a little bit, but I also want to talk about internals today and technicals when it comes to analyzing the market on this rally today. Alright, and what we saw today is the Dow closing up, basically wiping out all of Friday's loss. And many of us looking at the headline numbers and what the media are saying, wow, this is phenomenal. We just wiped out all of Friday's loss, and now clear steam ahead. Hopefully we can rally. Maybe the Fed lowers rates on Tuesday when they come out at 2:15 with their rate analysis numbers, and maybe everything will be fine. And as if you guys have been following my reports, which I really hope everyone has, I want you to know that that's exactly the mentality that the market needs you to take before the next fall. You guys know I'm a huge contrarian, and a rally like this today is exactly one of the options that we had, alright? Now, in the video on Friday, we talked about two possible scenarios. One, the market stays flat Monday and Tuesday and rallies on the Fed. Or one, the market rallies Monday and Tuesday, thinking maybe the Fed will lower rates, and then sells off on the Fed. Alright? So far, it looks like it's the second option here, as we had a very big rally. The NASDAQ was up 36, the Dow up 280, and overall, the only problem with this rally is that internals were poor. Volume was not extremely heavy, not like the sell-off days, and new highs and lows were so skewed, and I want to show you this, alright? I'm going to put this up right here so you guys can all see this. This is the New York Stock Exchange and the NASDAQ, and the New York Stock Exchange was up nicely. The NASDAQ was up 36 points, but look at the advanced decline here. You had 1,450 stocks up for 1,625 down. Alright, folks, and what is that telling us there? The NASDAQ was up 36 points, but more stocks were down than up. Okay, well, that's one interesting thing. Now let's look at the new highs to new lows on the NASDAQ. 63 new highs, 315 new lows. What does this mean? Well, what this is telling us, folks, is that some of the bigger stocks, which have more weighting in the NASDAQ, are pushing the market up here, all right, while some of the smaller stocks are really falling apart, and we're seeing this. All right, and this is the same with the New York Stock Exchange. Look at the new highs. Advancing declining was slightly better here, with at least the advancing issues were more than the declining issues at 17 to 15. But the new highs were only 38 to over 600 on the downside. And again, that's got to make you wonder here, what's going on? So anyways, there's our advanced decline ratio, and that's very interesting to note, and I want everyone to focus in on that and realize that. And in addition, you see the Dow taking back all of the loss, but remember, the Dow is only 30 stocks, and it's a very skewed index. It's really the media index because they can really make it look how they want because it's only 30 stocks, so when plunge protection comes in here, you really only have, 30 stocks to push up, so the headline number looks phenomenal. But again, the NASDAQ, NASDAQ was up nicely, but the NASDAQ dropped 64 points on Friday, and we were only up 36 today. So again, let's keep this in perspective, guys. And since you guys are what I consider my group that are watching these videos, I want you all to realize what's going on here. That yes, it was a nice day today, a nice rally. It's always good to have a rally, but we don't see this as being an end-all rally where we start a bull run up again. Okay, so tomorrow the Fed meets, and it should be very interesting because the Fed's in a very tight position, as we've been talking about, and just want to reiterate something for all you guys watching this video. There are a couple things that I want you guys to all be doing. One is you every night on InTheMoneyStocks.com read the free daily market report. All right, that gives you an idea of where the markets look to be going, what's been going on today in the markets, and we also show you what we think about oil, gold, the 10-year yield, and the U.S. dollar. And it's very important to keep up to date on that stuff because it gives you a sense of what's going on in the market overall. Also, what I need you all to do, aside from viewing these videos, I need you also to realize that every Sunday night at 7:45 p.m. Eastern Standard Time, there's a free Sunday night market chat where I host it, my partner hosts it, and one of our other friends also hosts it, who's a former market maker, and we all get together and have a free chat for an hour, Sunday nights, 7:45 Eastern Standard Time. And this is what was key yesterday. We really went over some great technical analysis yesterday in the Sunday night chat, and we also went over what was going to go on tonight and today. And this is exactly what we talked about. We said, listen, there's too many bearish people out there. Chances are they're going to rally the market. We did not necessarily think it would be such a rally as today. We just thought they'd push it up into the Fed. because there is anticipation out there that the Fed will lower rates. All right? And you're looking at a NASDAQ chart today, and you can see what a day it was. And here's the daily chart, and you can see this big steep decline. And look at today, guys. We did touch that 200 moving average, and you know you always get a bounce off that. Any way you cut it, you're always going to get a bounce. But again, with the Fed coming up here, they're in a tight position, and we discussed this last night as well, and in the video on Friday. All right? If the Fed lowers rates to save the credit issues in the market, the dollar will decline in value steeply against the yen, the euro, the pound. Okay? If the Fed doesn't lower rates, the credit bubble must burst and everything has to happen. Now, the one wild card here, which I hope doesn't happen, because in the long run it would be worse, even in the short run it would be better, but the long run would be much worse, is if the federal government somehow bails out some of these credit mortgage players. All right? That would be literally a save in the near term, but catastrophic in the long term, because it always comes back to bite everyone in the ass. And what do I mean by that? Well, it's great you can save if you're a parent, right? And you keep on, telling your, every time your child gets into trouble, you bail them out. Eventually, the child expects that every time you'll bail them out, and they'll do worse and worse things, and eventually there's a cataclysmic effect there where something horrible, horrible happens. So my point here being, guys, is that the government is like the parent here. A parent can't continually bail out the child. The child has to learn the lesson eventually, so it doesn't do the same mistakes over and over again. Okay. Now the question becomes here, folks, and I'm going to put up the ES chart here, the ES minis. You guys know I follow this very closely. And again, you can see the big steep decline here, is what happens when the Fed comes out. Because the Fed's not going to lower rates. It's all about their wording now. If the Fed were to lower rates, everyone thinks, all right, this is the way everyone thinks. Everyone thinks that if the Fed lowers rate, we'd have a huge rally and go back to bull mode. And I'm here to throw a curveball to you guys, and I want you to pay attention to this. If the Fed lowers rates, I think the market would sell off dramatically. And you might say, well, why? They're trying to save the credit. Yes, they're trying to save it. But what they're saying is things are much worse than we think, and we have to do this to bail out the economy because it is horrible out there. We're going to go into recession, etc. So I want to throw that ball to you guys and think about that, because everyone's thinking contrarian. I mean, the opposite of me on this, saying, wow, if the Fed lowered rates, we'd go into rally. No, I don't think so. It's not that simple. On the off chance here, the Fed stays the same, they might be sending a signal here that the economy is strong enough to withstand the issues here, and things will turn out to be okay. So keep that in mind, folks, and realize that it's going to be a wild card. It's definitely going to be a wild card here. And having said that, we are advising, or we're suggesting to our subscribers that we go in to the Fed meeting holding no swing trade long or short, because that's how volatile it could be. All right, the market. We think we have an idea of which way the market will go, and our subscribers understand that. But it is a wild card, and whenever you're less than 80% sure of which way it goes, we say stay away. Not worth risking your money. If it's 50-50 or 60-50, why don't you just go to a casino and put your money on black or red? And then, therefore, listen, you got a 50-50 shot anyway. So if you want to go to a casino and play it, then go into a stock here tomorrow. However, after the Fed, based on the technicals then, we can analyze and make a decision to go short or long based on this move. All right, so again, tomorrow at 2:15, the Fed comes out. And based on that, we'll be able to analyze, and our subscribers will find out which plays we're looking to go long in, which plays we're looking to go short in. Alright, so to sum things up, I've pretty much discussed what we're looking for tomorrow. And again, this video won't be too in-depth because really we're just waiting on the Fed tomorrow. And I'm going to put back up the NASDAQ chart so we can all see the sell-off here. The stows are trying to bounce up and down here based on this. But I also want to go over the intraday stock chat. For those of you that are looking into the intraday stock chat, and the intraday stock chat is nice, alright folks, because it's not just a day trading chat room. It's also a month-long seminar you can subscribe to constantly go over the markets throughout the day. And for $199.95 for a month-long seminar, it cannot be beat, even if you're not a day trader. Alright? And we go over level 2, how to read a level 2. We go over chart analysis, technical analysis, different theories. We go over contrarian thinking, contrarian indicators, as well as lots of different types of thinking, as well as day trades. All right, we call out our day trades as we do them live. If there's lots of day trades, we don't teach as much because we're very active day trading. If it's a slow market, then we do more teaching. So I want to encourage everyone to look into signing up for that. It's a phenomenal product, and for the money, it is absolutely great. And those of you that want to check it out, email me at gareth@inthemoneystocks.com, GARETH@inthemoneystocks.com, and I will hook you all up with 1-day free trial. All right, you email me, you ask for the free trial, I'll get back to you with instructions about how to get into it, and we can do that. All right, folks? The other product that we like, which is one of our top products, is the Swing Trade Alerts. Phenomenal product. You get buys and sell notices every day after the close. A research report comes to you that we've done. Phenomenal product. Always making money here. Sign up. Take care. We'll talk to you tomorrow.